Hello everybody and welcome to Project Trade. This is the Technical Indicators Show, and in this video we are talking about the On Balance Volume Indicator, the OBV. It was created by one Joseph Granville in his 1963 book, New Key to Stock Market Profits. An excellent read for the Granville fanful, which should almost certainly be included in the primary school curriculum. A bit of an old one, but that doesn't mean that we should immediately disregard it. Judging by the indicator's name, you are smart to assume that this is a volume-based indicator, so it's looking at how much an asset is being traded at any given time. The OBV is presented as an oscillator, so it's going to sit beneath your price chart looking up at the price. And unlike with a lot of oscillators, such as the relative strength index or the stochastic oscillator, there is no fixed value or fixed scale to the on-balance volume indicator. The particular value that the OBV gives is relative to the particular asset which is being traded. Let's take a look at the formula calculation to find out how it does this. There it is, fairly simple. The indicator takes the volume figure for the current period and adds it onto the existing OBV value if the closing price of the period is higher than the previous period, or subtracts it from the existing OBV value if the closing price is lower than the previous period. This additional subtraction continues ad infinitum, hence why there is no fixed scale. It all depends on the volume of the asset that it's valuing and will just keep on going and going. Also worth noting that if there is no change in the closing price between periods, then the OBV value will remain the same too. That's what it looks like. There it is, the OBV indicator on the charts, just oscillating away, doing its thing. We have given it a light green color for the line, and you can see from the settings the only other input you're allowed is your volume type, a choice between tick volume or real volume. Now I'm yet to find a broker who can offer the real volume, so everything you see from us as regards the OBV should be drawn from the tick volume point of view. That's the basics of how it works at its core. When it comes to the entry signals that we get from the OBV, it does have a couple uses in that department. Firstly, it can be used as a very basic level of trend confirmation. When price is rising over time, and so too is the OBV, that can be seen as the indicator confirming with volume that the trend is on the rise. Similarly, when price is going down for a period of time, that trend can be backed up by the OBV if it is falling as well. As a volume indicator, it could really assist your trend indicators for that extra level of certainty on the trend going. Here's an example, and we can see from our yellow trend lines marked on the chart and the OBV oscillator that as one has risen across that time frame, so too has the other. Some good assistance in confirmation. You can see it here for a sell-off example too, price falling a bit steeper than the OBV is, but nevertheless they are in tandem with one another, assuring us that the market has been selling down at least in the time between those two periods at the start and end of the trend lines. That's the trend confirmation, but this is also one of those oscillator indicators that is going to give you divergent signals as well. That's the opposite of trend confirmation, where price has gone one way but the OBV indicator has gone the other way. This divergence can be split into a bullish and bearish divergence. For bullish divergence, we see price finding a lower low between two periods, whereas the OBV finds a higher low between those same two periods. This indicates good potential for a buy signal. That means for bearish divergence, price has got to a higher high, whereas the OBV has made a lower high in the same time frame. Bearish divergence is indicating to you and me that a sell trade could have a higher chance of success than without divergence. Here's a bullish divergence example where we're gunning for the buy trade. Our yellow lines on the chart and oscillator demonstrate the divergence. On the price chart, it is clear that between those two periods where the line extends, the price has taken a steep drop. But when we look to the oscillator to see if that is confirmed, we actually see that during the same time period, the OBV has risen and found a higher low. That's our buy trade signal, and there's room for taking profits over the next few candles. Good stuff. Now here's a bearish divergence example, just the opposite of course. This time on our price chart, we can see that price has found a higher high from that V-shaped dip. Meanwhile, the OBV oscillator in that same dip has disagreement and has found a lower high in its reading. That screams out to us that it must be time for a sell trade. So we take that sell trade, and as you can see from the candles which follow, we are going to be indulging ourselves in some nice profits. Those are the key entry signals for the OBV, but it also has a couple ways which could help us manage our money, although not exactly its peak strength. First off, you could flip that divergence around and use it purely as an exit signal. So imagine yourself in a nice buy trade from other trend indicators getting you into that buy trade. Price makes a higher high, but the OBV hits a lower high at the same time. That could be your signal to take your profits and go home. The bearish divergence is indicating a reversal against your trade's direction could be due any period now, so take what you've got. Also, if you're familiar with the relative values of the asset that you're trading, you could close your trade if the OBV reaches a particular value. So if you're in a buy trade with the OBV at a value of 35, you could say that if it goes to 45, you'll close the trade with profits, or if it gets down to 25, you'll close it with losses. It has got the potential for either a take profit or a stop loss, but you'll likely need to have a good historical understanding of the OBV for the particular asset you're trading to actually make this an efficient method. It's not one for jumping in on with a $1 million live account without testing appropriately. Money managed though sounds good. In the markets, as the OBV is valued relative to the particular asset that you put it onto, there's no harm throwing it on any chart if you're looking for a volume indicator to help confirm your moves. That being said, the indicator was designed by Granville with the stock market in mind, so using it on assets outside of single stocks does differ to how the indicator was conceptually designed. Just an asterisk worth noting if you are using it in different markets. And as we mentioned previously, you do get the option to have the indicator apply to the real volume as opposed to the tick volume. Tick volume is easy for trading platforms to understand. It's simply how many times price ticks up or down within a given period. Real volume is much more difficult for brokers and platforms to give us access to, which makes sense particularly for Forex, which is a decentralized system. If, however, you are fortunate enough to have access to the real volume data for any asset, you will likely find that to be a more accurate input into your volume indicators, including of course the OBV. If you can keep it real, then keep it real. In terms of other indicators which are similar to the OBV but not quite the OBV, the most obvious one that springs to mind for me is the accumulation distribution indicator. Much like the OBV, it is a volume-based single line oscillator which has a value which is relative to the scale of the asset that you're trading on. That's what it looks like beneath the price chart, and it is basic to note the similarity in presentation it has to the OBV, and likewise to the OBV, the accumulation distribution indicator can be used for trend confirmation and divergence signals. Another couple similar indicators would be the negative and positive volume indices. Often used in conjunction with one another, their formulas are looking at price and volume as compares to the previous periods. Just like the OBV and the AD, they're volume-based single line oscillators. There they are again, oscillating beneath the price chart, negative volume index on top, positive index on the bottom. For both of these, we're still seeing a scale which is not fixed. It is going to differ between markets for the asset and keep on going as periods keep coming. Just as it is for the OBV and the AD, use the negative and positive volume index again for trend confirmation or divergence to help you getting into those trades. Finally, although it's not really a technical indicator as you'd classically think, you should also have the volume itself on your chart. This is likely to just be the tick volume again, but it is there for you. It's simple to see that a stock market open or a non-farm payroll release, for example, is going to see a sharp volume increase. It's there right in front of you. Likewise, if there's a global macro scenario playing out, you'll see the volume spike up on the daily chart as well. Hopefully the trading platform will give you the exact tick volume number for a period should you need it. Just don't forget that instead of needing all the fancy bells and thistles that come along with indicators, sometimes the volume in its rawest form is all you need. In conclusion, the OBV, it's a useful volume indicator. Decent volume indicators are hard to come by, particularly as they are often solely based on the tick volume rather than the real volume, as we've discussed, but the OBV does do okay with uses in both entering and exiting trades. It's an easy to calculate indicator too, which will help people out if they are manually drawing their indicators or oscillators, as I tend to do. Just count the ticks as they occur one by one, then note whether price closed up, down, or stayed the same since the previous period, then input that tick figure into your final OBV formula as appropriate. Easy done. It's the most reliable way, especially if you're on something like the daily time frame. Gotta be manual, you can't be trusting those machines. As an indicator though, the OBV isn't going to do all the heavy lifting. A single volume indicator alone is unlikely to be enough to get your strategy into profitability, so do make sure that its use is combined with other indicators, be them trend-based, reversal-based, momentum tracking, whatever your strategy is after. Try and use at least 2 in a technical strategy. That's everything for the OBV, but if you do want more information on the indicator, then you're able to find some of that in the video description, no problem. And never ever forget that every single chart we show you has been completely pre-selected. They are not in fact arbitrary price charts where examples are plentiful. We search deep into those charts to find find the moves that show us clearly making maximum profits like the indicator is a winning lottery ticket. Not the case, but we have traded the on-balance volume indicator in live forward testing, and those videos will also be linked in the video description. Thank you for watching. This is Project Trade. I am Genghis Khan's favorite horse. Blessed be the Granville, and there will be more.